The new unemployment report has just come out, which shows us just how bad the economy is getting, as it cannot keep up with the population growth and the mass migration program. So Canada's job market stalls in June as unemployment rate climbs to 6.4%. So the unemployment rate once again on the rise from 6.2 to 6.4%. This is the June data that just came out. If you put this on a 10-year chart, you can see it is well above now 2018, 2019, and 2020. And we're going back to 2022 levels now, which is really not a good sign. So we'll get into the nuance in a minute here after we just read the headlines. So Canada's labor market stalled in June, losing a net 1,400 jobs, pushing the unemployment rate up 0.2 percentage points to 6.4%. The data was weaker than expected, as analysts polled by Reuters had forecasted a net gain of 22,500 and the unemployment rate to rise to 6.3%. Markets increased bets of a Bank of Canada rate cut in July slightly from below 50% before the Labour report was released to around 55%. Again, they're just speculating about these rate cuts, these token rate cuts, which are really going to do nothing. But anyway, we'll just leave them to do that. Canada's unemployment rate has climbed 1.3 percentage points since April of last year, and job growth has failed to keep up with Canada's population surge. There were 1.4 million unemployed people in June. The federal data agency says an increase of 42,000 from the previous month. The unemployment rate is now at the highest since the 6.5% level hit in January 2022. Excluding the pandemic years, unemployment was last 6.4% in October 2017. So that really goes to show you what sort of economy we're in. We're going back to 2022 levels where, of course, there was lots of restrictions in place on the economy and lots of people weren't working back then. So, we have a terrible economy right now. And obviously, if the unemployment rate is increasing, it goes without saying that you're going to see crime and civil unrest increase with that. And that's exactly what we're seeing. Major cities, Calgary, Edmonton, Vancouver, Toronto, all seeing a massive increase in the amount of crime that's happening, especially the random violent crime, which is really concerning. And I do not think this is good at all moving forward into the future, as you just see this increase and increase and increase. You're taking in more people from foreign countries who can't get jobs, and they're used to a totally different environment to what they have right here in Canada. You're just going to continue to see that impacted. So it's really not good. And then OpenText announced that they were going to cut 1,200 jobs as part of a cost-saving plan. Thank you, Terry, for sending this to me. So OpenText in Waterloo, a business software company, they announced that they're going to cut 1,200 jobs as part of a business optimization plan aimed at saving around $200 million a year. The Canada-based company said it expects to book $60 million in restructuring charges, which will be substantially recognized by the first fiscal quarter of 2025, which runs through September 30th. And then it says about how the stock rose. And I always find this hilarious because, when you're getting rid of employees and workers, how is that bullish for a company? Obviously, people think, oh, yeah, that means their earnings are going to be better. But that just shows that the company's in dire straits. It's not growing. When you're getting rid of good employees, it's really not a good sign. So obviously, tech still struggling, and we're beginning to see more and more of that hit the headlines over the past couple of weeks in the United States as well. So the labor force survey for June 2024, basically just explaining what happened there. We've been through that on Yahoo Finance, so I won't bore you with the details of that. Let's see which industries were most affected now by this report. So you've got transportation and warehousing, which was down, information, culture and recreation, wholesale, retail and trade, professional, scientific and technical services down, public administration down, construction, utilities, business, building and other support services. So what is on the up this month? You've got healthcare and social assistance, natural resources ever so slightly, finance, insurance, real estate, rental and leasing ever so slightly, manufacturing ever so slightly, other services, not sure what that is, up 7,500, educational services up 8,000, agriculture up 12,300, that's pretty good, accommodation and food services up 17,200. So a lot of the change change here in agriculture, accommodation, and food services is obviously going to be ramping up with the summer, expecting, a big summer of tourism. And obviously, we know a lot of Canadians are choosing to stay at home, and that's because of the cost of living. They're choosing to, if they are going on vacation, go on a vacation within Canada. And what that typically means for the tourism industry is they don't spend as much money as foreign tourists. Now, it's not clear whether there's going to be lots more foreign tourists this year. We won't know until obviously after the fact in the fall. So it'll be interesting to see. And then let's see what happened with the unemployment rate by the province now, because obviously this is really interesting considering some of the gains that we've had over the past couple of months, like Alberta. So BC down 0.4%. Alberta is pretty much flat, just down slightly in the unemployment rate to 7.1%. That's climbed over 1% in the past 2 months. So nothing goes up in a straight line. You've got Saskatchewan down ever so slightly, pretty much flat at 5.5%. Manitoba at 5.1%, up ever so slightly. Ontario's now joining the 7% club along with Alberta now, plus 0.3%. Unemployment rate now stands at 7% in Ontario. Quebec is up over 0.5%, up 0.6% to 5.7%. New Brunswick up 0.2% to 7.7%. Nova Scotia up slightly, 6.6%, up 0.2% there. PEI climbed nearly 1% to 8%, surprising at this time of year. And you've got Newfoundland and Labrador, which is down from double digits again to 9.2%, but they've been back and forth for that for a while now. So now let's get into the class of worker, which is very interesting. So when you look at what happened May to June, you can see that public sector employees actually decreased, went down 14,600, but year over year they're up 182,000. So it is going down slightly, and that could obviously be provincial governments, it could be federal governments. We don't really know at this stage. I would hazard a guess it's not federal government. So private sector employees, that is up only 5,400 jobs, so not really that much difference there. You've got 106,000 change year over year, but when you really think about that and adjust to the population and all the people coming in as non-permanent residents, these numbers aren't really that accurate and don't account for it. So I would say that is way, way off. And then you've got self-employed here, which is up 54,500, and that's up 7,700 jobs. And then when you look into what happened in different industries, you can see the full breakdown here. There wasn't any big movers month over month. The biggest thing was accommodation and food services, and obviously agriculture, which we went over already. And then another thing that I want to go over, which so many of you put in the comments, and we really should have been going over this with the labor reports, is what's happening with full-time and part-time employment. And this is very important. So Newfoundland and Labrador here, you can see full-time employment just grew 300 jobs, part-time employment up. You can see Prince Edward Island, PEI, 1,000 jobs created, part-time employment down. So that's a good thing. Nova Scotia lost 2,600 full-time jobs, added 800 part-time jobs. So again, that's not very good. New Brunswick, 2,600 jobs created full-time, 400 created part-time. Quebec lost 3,200 full-time jobs and lost 14,500 part-time jobs. You've got Ontario that lost 7,400 full-time jobs and actually gained 17,200 part-time jobs. Obviously, economic weakness could be defined by when you're gaining a lot of part-time jobs as opposed to full-time jobs. I mean, that doesn't really say stable economy, does it? So anyway, Manitoba, 4,400 jobs created full-time, 1,200 jobs lost part-time. Saskatchewan lost 1,200 jobs full-time and part-time gained 1,600 jobs. Alberta created 5,700 jobs full-time, created 2,400 part-time jobs. And British Columbia lost 3,100 full-time jobs and lost 6,500 part-time jobs. So obviously that says a lot. Obviously that number is not adjusted for the population. So when you think about what's going on with the population growth across different provinces, specifically let's use Alberta as an example, the province is exploding in population growth from both interprovincial and international migration, which is all centering in Alberta because of the cost of living crisis, and that is driving the cost of living going through the roof in Alberta, which is ironic. But anyways, if you take that province as an example, when you adjust it down to the population, there's not enough jobs that are being created, full stop. So even though it looks like there's strong job growth there, when you actually dig into the nuance of what's happening with the population, not really. So once again, we've got the unemployment rate hitting 6.4%. That is not a good thing. The economic implosion just continues here. The Canadian dollar has been fairly stable. It's had a stable week. Last week, it actually rallied pretty good last week. And like we've said, you know, if there's lots of people who are trying to short the Canadian dollar, what's likely to happen? Probably going to go up. We'll continue to see what happens over this week with the Canadian dollar, because that's what's really going to matter as this unemployment report continues to be digested. So anyway, guys, I want to thank you so much for watching this video. If you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, use the affiliate link for this channel, which is expressvpn.com/marketmania. That's the VPN that I use. And I will see you in the next one. Take care.